Good evening, everybody. Can you hear me? Can you see me? Can everybody see me? Can you hear me? Hello, hello. Good evening, everyone. Welcome to the last session of paper 2. Today we're going to be dealing with the estate duty addendum. Pretty straightforward. It's not complex at all. Am I visible? Am I audible? Can you see me? Can you hear me? Okay, I'm just going to go ahead and share my screen so that we can start. I don't anticipate this session being long because the SDGT addendum is pretty straightforward. All right, hello. Thank you for the message. Yes, guys, today this session is probably not going to take long because, the SDGT addendum is pretty straightforward. So we have done quite a lot in the last couple of days. We started with testate succession, and then in testate succession, we really delved into it. We really went in. So if you have not watched those lives, please do yourself a favor and watch them. So it's not just me reading out what's on the screen, but rather doing examples, explaining things in details, and just giving examples. I think that people who have joined the classes have found them to be so beneficial. People who have joined the classes, they state that if the paper was asked on what we have done already, they feel confident that they'll ace the paper. So please watch the live. I think that you will benefit greatly from it. And I also will not be repeating, going over what I went through the last time because we already went through that. Now let's start with estate duty addendum. Now, before we get into that, I want to start off by saying that, when we deal with testate succession, we usually deal with the Wills Act. That's the predominant act that we deal with. When we deal with intestate succession, we looked at the Intestate Succession Act extensively because that guides how estates need to be devolved where there is no valid will. So now that we are on the estate duty addendum, there is another governing act, and that is the Estate Duty Act. So you want to just, go over the sections, especially the ones that I have highlighted here, so that you know what is what. So for example, like section 3.2, just section 3 in general is really important because you need to know what actual property is, and you also need to know what deemed property is. Section 4, you need to know about the deductions. You have to know about the abatement. So don't do yourself a disfavor by not reading the Estate Duty Act. Another thing I also want to say is that, this is a repeat of what I've been saying throughout the sessions, and that is where I have mentioned the section numbers, please look at the section so that you don't get lost, so that you know what to do. In this paper, the sections are literally like a memo, like the L&D account. The fact that in your heading, you need to have a master's reference, you need to have the deceased full name, you have to write if they have died they have died testate or intestate, whether they were married or not. If they were married, the marital regime, the name of the spouse, the ID numbers, those things are not just things you put in the heading because you want to put them in the heading. You put them in the heading because that's what Regulation 5 states. So when you look at LPC memos, you will see that they mark you according to what the Act requires. Where there is master's reference, they'll put a mark. The Act says that you must have a master's reference. Where there is ID number, they'll put a mark because that's what the Act says. So you want to look at the Act extensively because the Act is really like the memo. So you want to take that into account. Right. So estate duty addendum, pretty basic and straightforward if you know what's going on. So first of all, you've got actual property and you've got deemed property. So we'll be looking at that, what actual property and deemed property is. So you add that together, and then that total will give you the gross value of the estate. After you have the gross value of the estate, you need to subtract the deductions that are listed in section 4 of the Estate Duty Act. And then you will get the net value of the estate. From there, you need to subtract the Section 4A abatement, which is 3.5 million rand. Now, if you have a net value estate of 3.5 million rand, and then now you get to the Section 4A abatement and you minus 3.5 million rand, that means that the amount, the dutiable amount will be zero. So that means that estate duty in that particular estate will not be payable. So then after you have subtracted 3.5 million rand, you get the dutiable amount. And then what you work on is the dutiable amount. Don't make the mistake of, you know, calculating the actual duty payable on the gross value or the net value. No, you calculate the tax that needs to be deducted from the dutiable amount. So all this formula is for you to get to the dutiable amount. And then once you get to the dutiable amount, don't end there because the dutiable amount is not the amount that you pay to SARS. What you pay to SARS is the actual duty payable. And how do you find that? That'll be 20% on the first 30 million of the estate, and then it'll be 25% on the amount above 30 million. So if the estate is worth, let's say, 45 million rand, right? 30 million, you'll have to calculate 20% on the first 30 million, and then the remainder of the amount you'll have to find 25% thereof, and then you will add the two amounts. That is the actual duty payable. So it is possible that you can have an estate where there is no estate duty payable because once, let's say, you get to the Section 4A abatement, and then now you have to minus 3.5 million rand, there's nothing left. It is possible, so don't get confused and think that you have done the wrong thing. It is possible. And I also want to just talk a little bit about the 3.5 million rand. Guys, this is not an amount that I have decided or you can play around with. This is an amount decided by the Minister of Finance. So unless you're the Minister of Finance, you can change that 3.5 million rand. But if you're not, the amount is 3.5 million rand. So don't try to remix it. This is the amount that has been given to you from the Act. So you use that amount. Even these percentages, don't just decide on percentages. These are percentages that have been given to you. So you need to know them. So far, are we okay with the formula for estate duty addendum? If the only thing we could write is the formula, would we know what to do? Okay, so estate duty is tax that is levied on the dutiable amount. Always remember this, of a deceased person's estate. So actual property, remember in our formula, we said that actual property plus deemed property make up the make up the gross value of the estate. So now we need to find out what is actual property, and then we have to find out what is deemed property. So actual property is the total assets. The total assets as per the liquidation account. So I stressed even yesterday on the previous sessions that if you get the liquidation account correct, the L&D account will make sense. Like, it will literally flow, because from that, those amounts that you have in the liquidation account, you are going to use them quite a lot, and especially the asset part of things. So make sure that when you write your assets, you write the right thing, and that you calculate correctly, because these are amounts that you're also going to be using, in the other subheadings of the L&D, like you've seen we have done in the previous days. So you will have, for actual property, it's your total assets as per the liquidation account, plus the limited interest enjoyed by the deceased. So the fiduciary asset account. Right. So now you've got all of your assets in the liquidation account. You've got that total, and let's say that total is 1 million. There's a possibility that in that 1 million are items that are not supposed to be in there. For example, a policy that did not nominate a beneficiary. Remember, a policy that did not nominate a beneficiary, where did we put it in the liquidation account? We put it in the asset. But when we read section 3.3, it tells us that that policy is not supposed to be there. So what do we do then? What do we do with that policy? So we've got our assets for, let's say, 1 million rand. Now we've got that policy. That policy has paid, let's say, 500,000. What we need to do is we need to minus the property from actual property. We minus the policy, sorry, from the actual property. So you less the policy from the actual property and add it to deemed property. So when you look at your table for estate duty, where you write, the total of assets, don't start by calculating for the policy. No, you write the total assets, and then after that you show that you have taken out the policy and you put it in deemed property. So actual property and deemed property will be separate subheadings. Right. So you list the policy from the actual property, and then you add it onto the deemed, and then the policy paid to a beneficiary. So now we have dealt with a policy that didn't have a beneficiary. That's the one you take out, and then you put it into deemed property. Now you've got a policy paid to a beneficiary. A policy that is paid to a beneficiary, it has never formed part of the liquidation account. It is deemed property. So just keep that in mind, that where in your set of facts it says that, Shella took out, let's say the deceased, I don't like making examples of myself dying and all of that. Let's say the deceased took out a policy and they nominated a beneficiary. And the beneficiary, is the one that receives the money. That policy has never been part of the liquidation account. Why? Because it was never the property of the deceased. The money was not paid out to the deceased. And remember that the liquidation account is basically the assets and the liabilities of the deceased at the time of death. So that's basically that. And then we've got shares in the private company. They are dutiable by the market value and not the selling price. If the selling price is higher than the market value, you subtract the market value from the selling price. If the selling price is lower than the market value, the difference must be added. And this difference is adjusted in actual property. So that's pretty straightforward. And then another thing you need to know. So when it comes to the assets in actual property, be mindful of policies, be mindful of shares, that you will have to write the market value, because that is what is dutiable, not the selling price. So the three things that you need to take into account is policies. Know who received the money for the policy. Was it the beneficiary, a nominated beneficiary, or was it the deceased? It makes all the difference. So it's policy, shares, and then property. not property, a farm on which a bona fide farming undertaking is being carried on. If there is farming activities that is happening on that particular farm, there will be a 30% reduction. There will be a 30% reduction on the total of that farm. So if that farm, let's say it's valued at 1.5 million rand, then 30% of 1.5 million rand, once you get that answer, you subtract it from the 1.5 million rand. That is what the act says. If there is a farming undertaking, then that 30% reduction applies. So calculating actual property, as you see, total assets as per the liquidation account, and then be mindful of the three, the policy shares as well as the farming undertakings. So that is the first part, which is actual property. And then we get to deemed property. So that is section 3.3. Let's talk about life policy. Remember, you took the life policy out of actual property. And where did you put it? You're going to put it in deemed property. But what amount are you going to put in? You're going to put in the maturity amount and not the surrender value. So what is the difference between the maturity amount and the surrender value? So when a person takes out a life policy, and they choose not to go forward with the policy anymore, and they decide, I don't want to pay these premiums anymore, I'm going to cancel this, I'm going to cancel this policy, that is known as surrender, because the policy hasn't matured. We say that a policy has matured when the policy has run its full cycle. It's run its full cycle when the person who took out the policy dies, because that's what a policy is for. So the maturity date is the date that you will have to look at, and not the surrender value. So if the policy was cancelled, way before the deceased died, that is not the amount that is supposed to be put there. The amount that's supposed to be put there is the maturity amount. Okay. And then this is also very important as you're making your notes and highlighting. Note that not all policies are dutiable. So which policies are exempt from being dutiable? Number one, a policy paid to a spouse or a child as per the antenuptial contract. Number two, buy and sell property. That is property bought by a shareholder on the life of a co-shareholder to purchase the interest of the deceased co-owner. So this is where, let's say, me and you are co-shareholders, and we decide to take on a life policy on the life of C, who is our co-shareholder. And then when C dies, we get money so that we can acquire his interest in the business. That is exactly what that policy is for. And then we also have a key man policy. That is a life insurance policy that a company purchases on an owner, a top executive, or another individual who is critical to the business. And then the proceeds thereof, when that person dies, the proceeds thereof are for the employer to get another person who is highly skilled. So when you've got these types of policies, you include them in your estate duty addendum, but then you will write 0 in the amounts because you will get marks for writing them. We're going to look at a question paper where you will see exactly what I'm talking about. So if the policies don't fall in the mentioned categories, category 1, 2, and 3, right, at what amount are they dutiable? Like I said, it's maturity value, except where the person who took out the policy and paid the premium is the one to get the proceeds. So you're right, it's the maturity value, except where the person who took out the policy and paid the premiums is the one to get the proceeds. Right. So let's say the policy proceeds are 100,000, less the premium paid, less 6% on the premiums, and then that amount will be in the money column. So remember that what I wrote there on 1, 2, and 3, those policies, you must write them under deemed property if it is a key man policy, or buy and sell policy, or a policy paid to the spouse or the child in accordance with the antenuptial contract, you write it in deemed property, but on the amounts you put 0 because you will get marks for writing them. And then where 1, 2, and 3 plus the exception does not apply, that value used for policies is the maturity value. Are we okay with property and knowing what is property in accordance with the Act? It might seem a little bit confusing, but we'll just look at a past paper to just, make sure that we are clear on all of this. Don't let this intimidate you. When you start reading the questions and stuff like that, you will see that this is not intimidating at all. So you've got deemed property and actual property, and the total thereof will give you what? It'll give you your gross value of the estate. Now we get to the deductions. No. Before we get to the deductions, sorry. There's also a limited interest and fiduciary of actual property. This falls here on deemed property. Fiduciary assets, which is, immovable property usually, will fall in here on deemed property. Remember that actual property is the total assets as per the liquidation account, and the limited interest enjoyed by the deceased, the fiduciary assets account. You've got that in the liquidation account. And then you've got here the limited interest and fiduciary of actual property. So it's important to know the difference between the owner, the fiduciary, and the fideocommissary. Joshua, in this example, is what? Is the owner of the house. And Joshua says that I'm going to give this house to Morena, subject that, Lily gets to use it. So Lily becomes the fiduciary, Morena becomes the fideocommissary. So now, these three people, where this property reflects in their L&D account is in different places, because in Joshua's L&D account, it's going to reflect in the liquidation side. In Lily's L&D account, it's going to reflect on, it's going to be in the estate duty. It's also going to be in fiduciary assets. For Morena, the account is the house is not going to be in fiduciary assets. It's going to be in the liquidation account because he's the last one here on the list. So we've got a very important question, a very important section, which is section 5.1b. Right? What is dutiable is the limited rights and not the market value of the property. So here, for example, you're dealing with a person like Lily, who enjoyed limited rights to that particular property, right? So it's not the market value that is going to be dutiable, because honestly, this is not Lily's house. So it's not in Lily's liquidation account. So what is dutiable is the limited rights and not the market value. So this is the formula that you use. Present fair market value, PFMV times 12% times F. So what is F? F is the age next birthday and then the sex of the one who is enjoying the limited rights. This is the formula. So where do you get this age next birthday and the sex thing? Where do you get it? And firstly, let me explain this age next birthday. So let's say Joshua dies. All right, here's an example. Morena is 33 when Lily dies. The PFMV, right, is 148,000 Rand. That is the present fair market value. Calculate the dutiable amount. So if Morena is 33 when Lily dies, the age next birthday is going to be 34. The next age birthday is 34. So you don't write, even if they give you an age and they say, oh, this one is 22. But what is the next age birthday? But usually you will write, the following, you will add +1. It is assumed that if we say Morena is 33, we are saying that, like, I don't know if you guys are understanding. His next birthday, he's going to be 34. So you know, yeah, so he's 33, he's going to be 34 at his next birthday. So then you will write the present fair market value, which we've got here as 148,000 times 12 times F. Where do we find F? We find F in the table provided in the estate duty, relating to estate duty and calculation of, this life expectancy. It's called table A, life expectancy table, section 29 of the Estate Duty Act. So let's say now we're dealing with 33. Now we look on the column age next birthday. So we have to scroll down to 33. We move, we get to 33. I'm not sure if you guys can see this, but let me enlarge it. Right. So we've got 33, right? 33 is here because that's the age next birthday. And then you've got expectancy of life. You've got present value of R1 per annum for life. Then you must look, are we dealing with a male or female? For purposes of this example, let's say Morena is male. Now go on to look at the male side, and then we must look at the age next birthday, 33. Now we'll go down to 33, and the male is 8.1 8836. That's what we have now for the male. So you just want to jot that number down because we are going to use it for the example. So the number that we have, let's say it's 8.18836. Now I also want to say that your exam, you're not expected to know this table off by heart. Like they're not going to say like they're not going to say calculate the figure F, and you have no idea, how to do it. Like you don't know what the table says. If they ever ask you something like that, they will give it to you in the exam. So don't worry about that as long as you know the formula. So we've got 148,000 Rand times 12% times that 8.18836. What is our answer? What is our answer, guys? Here's the formula. Quickly punch it into your accounts, into your calculators. Let me see if you hear what I'm saying, if you know how to calculate this. Okay, so the answer is 145 425.27. So it's 145,425 Rand 27 cents. So that is the limited right, and not the market value of the property, but the limited right that the deceased enjoyed. So we've got that. Are we okay with that calculation? Guys, are we okay with that calculation? Are we understanding so far? Okay. I'm guessing we are all fine. So we've got that one. So what do we have now? Now we know how to deal with deemed property. We know how to deal with actual property. And then the total gives us the gross value of the estate. Then when you've got that, you list the deductions. What does the act say? This is literally what section 4 says. Funeral expenses, you will minus them. The liabilities of the deceased, which are found in the liquidation account, administration costs, you will deduct those. Foreign assets, be mindful of what the theory says when they ask you this question, because it might be a bit tricky if you don't understand this point well. So foreign assets, except where the deceased was a foreigner at the time of their death. So if a person has foreign assets, they are not going to be they are not going to be they are going to be a deduction, right? It says foreign access except where the deceased was a foreigner at the time of their death. So meaning that foreign assets in general, all foreign assets will fall here. And then the second exception is that where the deceased was a foreigner but was ordinarily resident before his death, then all the property outside of South Africa is excluded. Right. So then the next one is expenditure incurred in carrying out the requirements of the master, the bequest to public organization for public benefit. So here on expenditure incurred in carrying out the requirements of the master, you will also find them in the income and expenditure account. You look at the expenditure. There's some expenses, maybe let's say petties and postage. And these are the ones that come after the date of death. And then you have all this expenditure that you incurred because you're trying to get things right with the master. You're going up and down, doing this, you're doing that, just to make sure that things are okay with the master. Then those expenses are deductible. And then bequest to public organization for public benefit. This one is also important. Making a public bequest to a public benefit does not mean that you will get a deduction. You will only get a deduction if the organization is for the benefit of the public, like a church or a hospital or an orphanage. So if you're just giving to a public organization and that organization does not benefit the public, you will not get a deduction. And then another one is accrual. The value of the accrual claimed by the surviving spouse against the estate of the deceased must be deducted from the dutiable amount. So after you have dealt with those deductions, you get to the net value of the estate. Then with that amount, you less the section 4A abatement, which is 3.5 million, it does not change. That's the amount. And then you get to the dutiable amount. Then you find the actual duty payable. Because remember, the dutiable amount is the amount before the percentages are calculated on that amount. So it's not that dutiable amount, it's not the amount that's going to SARS. What needs to be the amount that goes to SARS is the actual duty payable. So the estate duty is payable on the dutiable amount at a flat rate of 20% on the first 30 million and additional 25% on the amount above 30 million. So are we okay with that? Can we move on to some questions so you guys can see how this has played out in a past paper? Are we okay? Have we got questions? And guys, I also just want to say that if you don't get it now, don't feel bad. Don't beat yourself up about it because you're not going to get this on your first attempt. If you have, well done. But if you haven't, don't beat yourself up about it. Do this again. I mean, you were not born knowing the liquidation and distribution account. So don't expect to just get it that quick. Give yourself some time. One thing I've realized about board exams in general is that people don't fail because they're stupid. People don't fail because they don't know. I mean, you're a law graduate. You know a lot of things. You know a whole lot of things. Some of you have done your masters. Like, you guys know a lot. So it's not that you're stupid. It's not anything but the fact that you have not put in enough time to doing this. Now, I know somebody might say, well, no, that is not accurate. These board exams are difficult. Trust me, when you have practiced and practiced and practiced and practiced, you will get it right. Some of you will get it on first attempt, second attempt, third attempt. The most important thing is that you give yourself time and you don't give up. I fortunately got what is this one, paper two, on my first attempt, but that was because I spent time. I spent time on it and just made sure that I practiced, because that's the most important thing. And then once you know it, you know it. These are formulas. There's no way that there's variations. There's no variations here. There's no variations. So if you know the formula, you know the formula, then you will get it right. So next time, go with the mentality that I can do this. Go with the mentality that this is easy. It makes things so much easier for you to process, as opposed to you going into the exam room with so much fear, filling yourself with fear and thinking, oh, I can't do this. So many people failed last time. This, that, and the other. Leave those, focus on yourself, and just give yourself some time. Right. So let's move on to this question. Let's look at, guys, please don't be scared. No, there's no way. You cannot be scared. Like, you cannot be scared. I remember when I wrote, literally was an estate. We were writing, I think Wilson Estates is in the afternoon, because there's one girl I met. We're sitting next to each other in the exam venue for paper one. We wrote, and then, that break, that gap between the two papers, we're sitting together just trying to revise. And when it was time to go in, she was like, no, I'm not going in. I'm really scared. And I was like, you literally have nothing to lose. If you go in there and you write, you might just get an oral. Like, what's the worst that could happen? The worst thing that could happen with board exams is failing. And that's not even the worst thing that could happen, because you have another chance to write next time. So guys, don't pressurize yourself. Like, really, really don't pressurize yourself. Don't do that. So we've got this question. This is a state question paper for 16. So this is one paper that I saw that really wanted you to have the whole L&D account. So I think this is a good paper to just. So we've got here, Jack Lee died on 1 July 2015. He was survived by his major cousin Angela, who is a chartered accountant, and his father Simon. Jack made a will leaving his entire estate to his father. Angela, who is registered for VAT, was nominated by Jack in his will as the executrix, and the estate consists of the following. So remember, executor, executrix. Executor is usually used for a male, executrix for a female. So if you see the word executrix in the exam, don't think this is like, what is this? Didn't learn about this. It's an executor. So you've got a farm. So the set of facts already tell you that the farm notice on which a bona fide farming undertaking is carried on, which is registered in both the deceased's name and his father's name in equal shares, and which has been valued by an appraiser at 4.6. Now, you already know, as you can see, your mind should already be thinking that in the estate duty addendum, I have to do what? I have to apply the 30%, because there must be a reduction, because there's a bona fide farming undertaking on there. And then we know that a farm will fall into assets, it will fall into immovable property. And then the farm implements belonging to both the deceased and his father in equal shares, with a total value of 380,000. So in the liquidation, so in the liquidation and distribution account, these farm implements will be in half. Why? Because they are in equal shares. So you will write in your first column where you describe things, you can say that the farm implements belong to the deceased and his father in equal shares. But then in your column, in your money column on the debit side, then you will put half of that. Because at the date of death, that it's not the deceased 380,000. And then the deceased is the owner of a house in which he, his father, and Angela reside in, which is valued at 450,000. The furniture and household effects, which Angela bought, these ones will not be in the liquidation account because they belong to Angela. And then a loan, the Lee Family Trust, Jack formed this trust in 2009 and sold some of his possessions to the trust for 2 million on a loan account. The trust repaid part of the loan every year, and the outstanding balance on Jack's death was 280,000. And when we've got a car in the deceased name, valued by the appraiser at 265,000. The executor sold this vehicle out of hand for 250,000 on 1 October 2015, and the proceeds were paid into the estate banking account on the same day. Right. Question. On number 6, what amount is going to appear on the asset side of the L&D account? Let's go. Let's take it back to L&D. If you get something like number 6, where there's a car, it is valued at 265,000 Rand, and it was sold by the executor for 250,000 Rand on the 1st of October. And we know very well that this one died on 1 July, but the car is sold on 1 October. I'm getting 250,000 Rand. Yes. You write 250,000 Rand. You know why? You don't say the 250,000 Rand it came after the 1st of October. The reason for that is that at the date of death, the car was there. This car was not acquired after the date of death. This car was there at the date of death. It's just that by that time, when it was sold for an amount that was lower. But, it was valued at this amount, but it was sold for a lower amount. The fact remains that at the time of death, that car was there and it was sold for 250,000. So that's the correct one. That's what you put in there. And then we've got the shares in an account listed on the JSE, which are valued by a stockbroker at the date of death. So we've got that. The dividends obviously are going to be in the income and expenditure. We've got the shares in the deceased name. So that one is, pretty straightforward. That's going to be in your assets. And then deceased had an investment of 200,000 at ABC Bank. The executrix realizes this investment for 240,000, of which 15,000 is in respect of 50,000 in respect of interest accrued after death. Number 9, what do we put in the liquidation account? What are we going to put here? In the liquidation account, are we going to put 200,000? Are we going to put 240,000? Are we putting 15,000? What are we putting in the liquidation account? I'm getting 240,000 in the assets. Anybody else got a different answer? Or are we all putting 240,000 in the assets? Okay, I'm guessing everybody's putting 240,000. Are we putting 240,000? Are we agreeing on 240,000? 240,000 assets. I'm getting 225. All right. So this is what you do. We're on number 9. The deceased had an investment of 200,000 at ABC Bank. The executrix realizes this investment for 240,000, of which 15,000 is in respect of interest accrued after date of death. So interest came after. And this amount, this 240,000 Rand, includes interest. But remember that a liquidation and distribution, well, a liquidation account deals with the assets and liabilities of the deceased at the date of death. So what you do is 240,000 and then you minus the interest. Why? Because the interest came after, and then you get 225,000 Rand. So 225 is the correct answer. It is because in the 240,000, it comprises of the interest that came at a later stage. So the interest is going to be where? In the income and expenditure. Does that make sense? Are we getting that one? Are we okay? Okay, perfect. Now we've got an insurance policy, A, taken out by Jack on the life of Angela with a life cover of 300,000. Jack paid the premiums on this policy. The executrix chooses to surrender this policy and the amount of 169,000 Rand is paid into the estate bank account that is an asset. And then proceeds of an insurance policy B on Jack's life in the amount of 295,000. The policy was taken out in 2004 by Jack's father, Simon. The proceeds were paid to Simon. So that does not form part of the estate because the money is not the money in the deceased account, but in Simon's. And then we've got proceeds of life insurance policy. C on Jack's life in the amount of 225,000. This policy was taken out in 2010 by Jack. He paid all the premiums. The premiums together with 6% interest amounted to 15,000 Rand. The proceeds of the policy were collected by the executrix. We know that that is an asset. And then proceeds of insurance policy D on Jack's life in the amount of 700,000. This policy was taken out in 2000 by Jack's employer. We know that one already. Who's getting the money? It is that one where the employer gets the money to look for another employee to replace Jack because Jack is highly skilled. So we dealt with that policy, that keynote policy. So you already know that that's the one. And then we've got, did I skip something? And then we've got final income tax assessment due by the deceased in the amount of 100,000, and then the total liabilities. Important to note this one, the total liabilities, including funeral expenses, normal liabilities, and admin expenses, amount to 400,000. So as you're listing your liabilities, remember if they tell you what the total liability is, even after you list the liabilities, though, even if you add them up and they give you a different figure from 400,000, refrain from writing that figure. The total for liabilities will be 400,000 because that's what they gave you in the example. Now, let's see if we still remember how to calculate executors' fees as well as the master's fees. Now, let me give you assets valued at let's say 1.5 million Rand. Let's go. What is the master's fee? What is the executor's fee? And then let's say the executor is registered for VAT. Let's see if we still remember what we've been doing for the past days. The assets are worth 1.5 million Rand. Calculate the executor's fee and then calculate the master's fee on 1.5 million Rand assets. We'll start with the master's fee. On 1,500,000. Let's go, guys. okay? Are we getting it? Guys, we can't be taking this long because there's time in the exam. Time. We've got 2.8 master's fees. Master's fees 2.8. Okay. Is it right? Executors remuneration. Let's do that one as well. Then I will explain to you if that 2.8 is the one or it's not. Master's fee 2.8. Executors fees how much, guys? Registered for VAT, and you guys said VAT is 15%. Executors fee 7,875. Is everybody getting that one? All right. So executors fee, we've got 7,875. Right. Let's work this out together. Master's fee, how do we work out master's fee on 1,500,000? So what we are going to do is, let's go back to our content. Right. Master's fee. We've got master's fee. So from 250,000 to 400,000, it is 600. And then you have to count how many completed 100,000s there are. So from 400,000 to get to 1.5 million, I always say, use your fingers, they work just fine. So 500,000, 600,000, 7, 8, 9, 1 million. So we've got 6 completed 100,000 and it gets us to 1 million. So you've got 6, and then how many more 100,000s? We've got 5 because it's 1,500,000. So that 6 plus 5 is 11 completed 100,000s. So 11 times 200, because the theory says that for every completed 100,000, the amount payable is 200. So 11 times 200, how much is that? That is 2,200 plus that 600 rand that we put aside. And then we have an answer of 2,800 rand. That is the master's fee. That is the master's fee. So 2,800 is the correct amount. Now, executor's fee, executor's remuneration, how much is it? It's 3.5% on the gross value of the assets in the liquidation account. And we said for purposes of our example, the assets are valued at 1.5 million. So we've got 35% of 1.5 million. How much is that? That is 52,500. So if the executor was not registered for VAT, then you would leave it at 52,500. But in this instance, the executor is registered for VAT. So how do we calculate that? You say 15% because that is the VAT, and then times the 52,000 Rand 500. Remember that when you calculate VAT on any amount, it is it is on the fee. So you won't calculate VAT on the assets. No, you calculate VAT on the fee. So it's 52,500 plus 7875, which gives us 60,375. So we are okay with that. We are cool. I see that's the answer that we have for executives remuneration. That is perfect. Now, the other parts of the liquidation and distribution account, I see that you guys have them well. I mean, they're pretty straightforward when we deal with the liquidation side. I think you guys are okay with that. Dealing with the recapitulation statement, cash or assets reduced to cash minus liabilities, and all those things that we went through. I think it'll be good for you to go back and just watch the previous sessions. So let's go back to our question, but now let's look at the answer and let's look at estate duty addendum. So guys, as you guys can see that on the liquidation account, literally the biggest thing is the liquidation account. Once you get to the distribution, once you're done with assets and liabilities and you get to distribution, things move a lot quicker. Once you've got that amount from the liquidation account, things move a lot quicker. Things like the income and expenditure account, pretty straightforward. So now, here's an example. So if you don't have any fiduciary assets, you just write nil. You just write that there are no fiduciary assets in the account. Don't think that, they want me to write fiduciary assets and I don't know where they are. I don't see them in the set of facts. No, you don't create them. If they're not there, they are not there. Now, with that example, the estate duty addendum. Right. So remember that formula that we started with. We've got property of the deceased, we've got deemed property, and we also have deemed property as well as actual property. So now you start first with what? The assets as per the liquidation account. And then less the life insurance policy because that's what the theory tells us. And then depending on who is the beneficiary and all of that, based on the act, and then you can either put it in deemed property, like you see they have here, on add proceeds of life insurance policy C. So when you less an insurance policy from this part, from this property, the actual property, and you take it to deemed property, then you write the less life insurance policy. Like, don't just minus and then put the amount. You need to put what you have less and the amount thereof so that it makes sense to the examiners and that the examiners can see that you know your theory. So you less and then you put it there, and then less the difference in value of private shares, and then less 30% on a farming property like we read in the set of facts. And then you've got that. And then you've got your deemed property. And then you put the deemed property. And then remember what we said. We said deemed property plus actual property equals to the gross value of the estate. Now you move on to the deductions. You deduct what needs to be deducted. And then after that, you come to the dutiable amount. You come to the dutiable amount. Dutiable amount, and then estate duty at 20% on 190,000 Rand. Remember that the theory says that it is 20% on the first 30 million. So any amount that is less than 30 million will fall in the 20% bracket. And then you will do that. And then apportionment of estate duty payable. Remember that you get to the dutiable amount and then you have to subtract the apportionment of estate, and then you get the duty that is payable, because you cannot pay estate duty if people's shares are in there. That amount is going to be high and you're essentially going to be paying for them, and there is no need for you to do that. In fact, it is incorrect. So here, then you will apportion the estate as you need to. For example, sometimes it will be something along the lines of in community or property. So then there'll be amounts that you have to subtract, and then you get to the estate duty payable by the estate. And then that's the amount. The 34,962 is the amount that will be paid over to SARS. So estate duty, it's pretty straightforward. Um, and yeah, that's pretty much it. That's pretty much it for estate duty. Are we all okay with estate duty? Are we fine? Are we still feeling scared? Are we okay, guys? Are we fine? Because this is literally it for estate duty. This is literally it for estate duty. And yeah, that completes our sessions for this paper. Okay, yeah, absolutely come back to the videos and watch them, rewatch them as many times as you want to. And then, write your questions in the comment section so that we can just address them together. If somebody has an answer, they can also answer you there. I'll also answer you there for the benefit of everyone so everyone can see the answer. So, yeah, that is it for tonight's session. Thank you so much for joining me over the course of the past couple of days. It's been absolutely amazing. I just love doing this. I really, really do. So I enjoyed being with you and just explaining this aspect of your board exams. And I wish you the best of everything. You still have ample time. Use it wisely. And if you are confused, please reach out to people. If you guys can, if you guys can, please just form like a group, or if you have a group with people, that will help you so much, because just trying to cram everything by yourself sometimes, it makes so much sense when you hop into a group and somebody's like, oh, this confused me so much and now I got the answer, this is how I got it. And it makes things so much easier for you to remember. And just having that support, knowing that I've got a group of people that I can text, that can help me, that are going through the same thing, really, really helps. So if you've got people around you, please utilize them. And yeah, that's it for today's session. I will see you guys on my next one. I'm not sure when that is, because that's probably going to be on another paper, but I will announce beforehand and then you will know when I am going live. And yeah, that's it for today, guys. I will see you when I see you. I wish you the best of luck with your paper. Good night. Bye.